Happy Wednesday and welcome to The Business Show, your go-to source for money and finance news in 10 minutes or less. I'm Andrew Gincola, and today we're covering the fact that markets take a hit. Now, stocks are back in the red, but what's driving that sell-off? And Google does its biggest deal ever with a $32 billion acquisition that shakes up the cybersecurity world. And Nvidia has new AI chips and a new deal with General Motors. The chip giant is bringing AI to your car. Could this redefine the auto industry? And the Fed is expected to keep rates steady today. So all eyes are on Jerome Powell's next move. Will interest rates stay high longer than expected? And Morgan Stanley lays off 2,000 workers with a major shakeup on Wall Street. And lastly, is YouTube is the new TV. More people are watching YouTube than ever before, and living rooms are being dominated by YouTube. All that and more, let's get down to business. All right, first we have just a really quick market update. So the S&P 500 dropped 1.07%, now down 8.6% from its February peak and nearing correction territory. The Dow Jones Industrial Average fell 260 points, erasing recent gains, and the Nasdaq, already in a correction, plunged 1.71%, leading the decline. Google does its biggest deal ever, a $32 billion acquisition of Wiz, which signals a new era for tech. So Google is making a bold move in cybersecurity, announcing on Tuesday its largest acquisition ever, a $32 billion all-cash deal to buy cloud security startup Wiz. Now, Google is acquiring Wiz in this record-breaking deal, outpacing its previous highest offer by nearly $10 billion. And this comes after Wiz walked away from Google's offer last July, opting instead to pursue an IPO at the time. And antitrust concerns were a major factor in Wiz's initial rejection, but this new deal signals a shift in the regulatory landscape. Now, experts say this deal is a litmus test for tech mergers and acquisitions in 2025 as companies gauge whether regulatory scrutiny under Trump's administration will loosen. And as cloud security becomes a major priority for enterprises, this acquisition positions Google as a dominant force in cloud protection and AI-driven security solutions. So online security is a huge, huge deal right now for a lot of companies because they do not want to be the one that has some sort of security breach. This is why Google is making this acquisition. Now, big tech's appetite for growth is huge with AI and cloud computing driving innovation, and Google's aggressive move is hinting towards more blockbuster tech acquisitions on the horizon. Now, will regulators approve the deal or will it face pushback? That's one thing we're going to find out. But one thing is clear. Google is betting big on cloud security, and this deal could reshape the tech industry's merger and acquisition landscape for years to come. Nvidia unveils new AI chips and strikes a game-changing deal with General Motors. So, Nvidia revealed the company's latest AI chips, introducing the Blackwell Ultra chip family and the next generation of Vera Rubin GPU. And Nvidia also announced a major partnership with General Motors, bringing AI-powered technology to future vehicles, driver assistance systems, and even GM's manufacturing processes. Now, the announcements came during Nvidia's highly anticipated annual GTC conference, where the company continues to cement its dominance in AI chip computing. Now, GM is going to get these AI-powered vehicles with NVIDIA's AI, and they're going to expect smarter, more autonomous cars in the near future. And these chip wars are heating up. There's been a lot of news lately about Intel and their new shakeups, but NVIDIA is racing ahead with next-gen AI chips, putting pressure on rivals like AMD and Intel. Now, the stock impact was interesting because in the short run, the stock actually went down over the course of a few hours after the announcement, but this could just be a short-lived decline. NVIDIA is once again proving why it's in the forefront of AI, and now all eyes are on these moves and how they will shape the future of computing and autonomous tech. Will the Fed hold steady? All eyes are on Jerome Powell today. So the Federal Reserve is expected to keep interest rates unchanged at 4.25% to 4.5% when it wraps up its meeting today at 2 p.m. Now, inflation remains above the Fed's 2% target, leading officials to adopt a wait-and-see stance before making any policy changes. Now, Fed Chairman Jerome Powell will address the public, offering fresh insight on the economy, inflation, and how President Trump's economic policies may shape future rate decisions. Now, this is usually a big deal, and markets are typically on edge because investors watch closely to see if Powell signals any future rate cuts or if the Fed will hold steady for longer. And the Fed is walking on a tightrope right now, balancing economic growth with keeping inflation under control. Powell's words could shake up Wall Street, but in the short run, again, a lot of times these Federal Reserve announcements will make Wall Street make a move, but you have to remember, as a long-term investor, these short-term impacts do not matter on your portfolio. You want to make sure that you are looking towards the long term when you make investment decisions. Now, Morgan Stanley cuts 2,000 jobs in its first major layoff under CEO Ted Pick. So Morgan Stanley is planning to cut about 2,000 jobs later this month, marking the first major workforce reduction under the new CEO, Ted Pick. And the layoffs will impact employees across the company's 80,000 person workforce, though the firm's 15,000 financial advisors will be spared. And Morgan Stanley stock is up slightly in pre-market trading, signaling that investors may see the move as a cost-cutting measure. Now, Wall Street's job cuts continue as Morgan Stanley joins the growing list of banks trimming staff amid market uncertainty and cost pressures. And the layoffs come as Ted Pick reshapes the future direction after taking over as CEO earlier this year. Now, with the job market still tight, Wall Street cuts could be an early warning sign for slower economic growth, but this is something we need to continue to monitor. Lastly is YouTube is the new TV and how it became the dominant viewing platform. So YouTube has officially taken over living rooms, with CEO Neil Mohan revealing that TVs are now the most popular way to watch YouTube in the US. As traditional TV viewership declines, YouTube is becoming the go-to platform for everything from podcasts to live sports. So YouTube viewership on TV screens has skyrocketed, surpassing streaming giants like Netflix over time. And so Netflix is now number 2 to YouTube, which is absolutely crazy. Over 8 million people now subscribe to YouTube TV, making it a major competitor to traditional cable. And the platform's diverse content, from long-form videos to shorts and live programming, is redefining how people consume media. So YouTube's rise marks a shift from traditional television to on-demand creator-driven content, and brands are reallocating ad dollars to YouTube as it becomes the most watched platform on TV screens. With YouTube dominating watch time, Google is cementing its position as a media powerhouse. So one thing is clear. YouTube isn't just a social platform anymore. It's the future of television. We've had 2 major Google announcements in this episode alone. So Google is making some major moves. Well, listen, thanks for tuning into the Business Show. If you know someone who would find value in this episode, share it with a friend or a family member. Also, if you enjoyed the show, please take a moment to leave a 5-star rating and review. And don't forget to follow the show on Apple Podcasts, Spotify, or your favorite podcast app. Thanks again for listening, and we will see you on the next episode.